All right, welcome everyone. Today is October 16th. I hope everyone's having a relaxing weekend. I'm going to go over the trades after CPI last week, and then I'll go over the charts that were posted earlier this morning. All right, so this upcoming week, we start with some earnings, bank earnings, Netflix, Tesla, and then the following week after that, the week of October 24th, is the bigger tech earnings with Google, Meta, Microsoft, Apple, and Amazon. And then 2.5 weeks is a Fed meeting, so another interest rate decision, and midterm elections coming in about 3 weeks. So a lot of moving parts over the next 3 weeks. I expect to see a lot more volatility. So yeah, just be on your toes. Could see a lot of direction change like we saw the past couple of days. So yeah, it'll be interesting to see the market, prints new lows, right? Doesn't reclaim June lows and just continues to break lower, or does the market start another rally after pretty much going lower the past couple of months here? So, and then Wednesday, housing starts, building permits, a couple of Fed speakers this week on Wednesday and Thursday and Friday, and then Tesla earnings on Wednesday. So yeah, it should be an interesting week. Not too much in terms of economic data, more of just earnings this week. All right, so give me a second here. I'm gonna share my screen and let's go over SPX really quickly. All right, so here is a 15-minute chart SPX. Everything beyond the right side of this vertical line is Thursday and Friday, right? So this is the end of Wednesday, and then the gap down is the Thursday after CPI. So SPX gap down from 35.76 to 35.20, and then quickly back tested that 3,500 support, dropped to 35.91 and held. So, between the first 15 to 30 minutes, the dip got bought up pretty quickly, right? If you look at the price action here, it looks pretty strong, right? So that was the first clue that maybe we could see some kind of bounce, but doesn't necessarily mean jump in right away just because, there was a negative reaction to CPI, 50-point gap down. So still at that point, I was still a bit more hesitant to just jump right into calls after seeing, especially the past 2 days, the market looked pretty weak. So after SPX popped up 35 points, after holding 3,500 in the first 15 minutes, then I started to consider calls a little bit more. But it wasn't until I think around 7:15 is when I started to jump in, a little bit after 7:15, right? So I waited about 45 minutes of watching price action before I switched over to calls. Okay, so after defending that round number, right, that psychological number that the market trades around, right, 3,500, and then printing a higher high in the next 15-minute candle, it's gave an opportunity to start considering trading the upside, right? So max downside at that point, 25, 30 points after defending 3,500. And then SPX chopped around for a bit, and then it started to break higher after that 715 range, 750 after 715. All right, so SPX, gave multiple entries on Thursday. The first one, if you're a more aggressive trader, quicker trader to recognize reversals, then SPX near 3,500 would have been the first entry, right? And then the next one was where I entered, right? Kind of just based on how it acted the first 30, 40 minutes of the day, that was worth a shot to me to consider calls. But the next bigger entry would have been 35.88. So after it reclaimed there, it did make a significant move. It moved over 110 points. I'm sorry, about 120 points beyond that. And then the next entry after that is 36.45. So 36.45 is near those June lows. So even if you caught that third entry point on SPX, it's still paid, right? And I think the previous day I mentioned, watch to see if SPX can reclaim 36.45, QQQ can reclaim the June lows after CPI. If it does, then that's going to present an entry to consider calls. So yeah, that was the best way to capture some premium for the upside, right? Just based on reacting to the price action after CPI. So yeah, hopefully that play-by-play can give you guys an idea that you don't need to find the perfect entry, right? There's still entry points along the way on to the upside, but you just have to manage your risk as it starts to run higher, right? Doesn't mean just avoid the whole move in general. Just if you enter at 36.45, obviously it's probably the last best entry. Then that means you can't go in full size. I would either do half size, a third size, or quarter size. So moving into Friday, right? Thursday into Friday was when we saw that reversal back lower. So, the first 15-minute candle, SPX failed at 3,700 pretty quickly, right? It broke above at 37.12 and then reversed lower. So, this type of price action that we saw from Thursday to Friday, it's not uncommon to see, right? We've seen this happen many times actually this year. So this time around, I think I was quicker to recognize that, right? So then that gave an opportunity to switch from calls to puts, right? I took NVIDIA puts and then SPX puts. So, and then another thing that I mentioned on Friday was that, there was a lot of premium in those puts, the 36.20 puts when SPX was around 36.75 range, right? I mentioned the 36.20 put had a lot of premium. I think it was around $5, $6, and I think they went to over $30, I think. So there were multiple ways to kind of see that we could see this reversal lower, right? There's a lot of premium inputs, and we saw that quick reversal in the first 15-30 minutes after SPX fell to 3,700. So, it went from 37.12 to 36.71 in the first 30 minutes, right? And it didn't really put up a fight to defend this level. It just broke under it and dropped 30 points in minutes. So that range there between 35.70 to 35.80, I'm sorry, I'm getting my numbers mixed up. So that range from 36.70 to 36.80 was the first entry to consider puts. And then once again, once SPX broke under that 36.45, which was the June lows, that also could have worked for puts, right? And those were the two main entries to consider for the day. Beyond that, it was kind of a slow drip to the downside for 4 hours. Okay, so the common theme here, though, is regardless of whether I took puts, whether I took calls on Thursday and puts on Friday, is just waiting for that bigger economic data / event to occur, because that's when you're going to see the bigger move, and then being able to interpret that information and then react to the price action. So I had no idea what the CPI number would be or how the market would react to it, but all I could control was how I interpret it and how I would react to it. So focus on what you can control and try your best to manage risk while you're in the trade, and then act appropriately based on the market conditions, right? So that's the essence of day trading, right? It's not trying to predict every single thing that's going to happen. It's more of what is happening and what is my best way to trade this, right? Am I going to trade counter trend? Am I going to try to find the quick bounce, or should I just follow the momentum and follow the trend, right? Every trader is different. Some people can find those bounces and capture premium, on calls during those bounces, right? That's just some people's style, but you have to figure out what's best for you, right? Don't try to just blindly follow every single one of my trades, because most likely you can't keep up, right? And every trade's not for you. So the best way to use information is look at what I'm trading, and if that lines up with something that you would normally take, then that can give you more confirmation to consider the trade. But if you're blindly following every trade and you don't really understand why I'm taking it, or what to do after you take it, then most likely you shouldn't be in the trade, right? And yes, you can get lucky, you can catch a run by following some of my trades, but in the long run, I don't think you can truly succeed, because day trading is not easy, right? It's not easy to be consistently profitable, and it's even harder to make millions and millions of dollars day trading. It takes a lot of focus, a lot of dedication, and there's a lot of pain along the way. So focus on learning, right? Focus on learning on my trades, what I'm teaching, and hopefully, over time you improve, right? So yeah, that's my explanations for SPX Thursday into Friday. Hopefully that is helpful. And let's go over the charts from that were posted earlier today. Okay, so first chart here is Apple, closed at 138.38. So had a pretty large reversal on Friday. I opened up near 144 and then went straight down for the rest of the day. So technically, Apple's still just in a range, right? It's holding up fairly well compared to many other stocks. But this week, watch to see if it holds 136. If it can't hold there, puts can work as a day trade. I wouldn't buy and hold yet as of now, since this is just in a range. It could reverse, right, and just chop around for the rest of the week, leading into Apple earnings the following week. So just be aware of that. The market has been in a downtrend for about 2 months now. I think September, October, yep, for about 2 months. So as of now, going into this week, I don't see a clear direction yet, even though the market looked weak on Friday. So be open-minded, right? Be open-minded that we could see fake outs to the upside and downside. So take what you can leading into big tech earnings next week, right? And then the Fed meeting in 2.5 weeks. So we'll see. But for the upside, I don't see anything great here. If, like I said, maybe quick bounce plays, but it could reverse back lower. So, okay, so here's AMD close to 55.94. Tried to reclaim 59 a couple times last week, couldn't get through, and then closed right under 56. So it looks like it's setting up for that next move lower towards 49, possibly down to 41 at some point this year. All right, so puts can work under 56 as a day trade. Above 59 calls could work. Right, you might catch a move up to 63, maybe 66. I would just treat it as a quicker day trade for the upside. Every time this thing has tried to bounce, it just comes back lower within 2-3 days. All right, so yeah. Okay, here's Amazon close at 106.90. So yeah, fell to that 112 last week, right? Dropped near 104 last Thursday, and then reversed back lower again on Friday. So looks like 101's in play, right? Puts can work under 109. Pops up there, it fails, puts can work. Puts can work under 104 as well. If it fails at 101, can go to 91. Right. Upside, I don't see anything great similar to Apple. I would just treat it as a quicker day trade. Above 118 could start a move up towards 129 to 130. Goldman Sachs earnings this week closed at 299.90. So, oh shoot, I think I updated this, but I don't think I saved it. But so basically, yeah, Goldman Sachs earnings, I think it's on the 18th. Yeah, it's on the 18th this week. So I think this is a 16 to 17 point move priced in for this earnings. All right, so most likely I would just wait till after earnings. For the trade idea, I think I put a 280 put. I think it's trading around $2.50 in premium. So 280 put's going to be best as an earnings trade idea. And then upside, I would just wait. Right, earnings typically typically harder to play. Right, so Home Depot closed at 276.43. So this one wants to drop to 263. Right, so puts can work under 278 this week. Even if it pops up 3-4 points, puts can work still. And then under 263, possible to see 246 to 240. Okay, here's IWM closed at 166.81. Tried to hold near 168. Last Thursday and Friday, couldn't close at the lows on Friday. So 162 is in play this week. Upside here. If it reclaims 168 and the market does bounce, right, reverses back against the upside, calls could work above 168 as a day trade. But for now, it could be a bit more choppy here if it stays between 164 to 168. Okay, so here's Microsoft. So I caught a bit of this one last week. close to 228.56. So could see a range on this one as well, right? 224, 233. I think it stays between there. I would treat both sides as quicker trades. Above 237, go to 241, 246 again. Downside here under 224 plus can work. Could go to 217, 212, and eventually down to 208. Nvidia still weak here. I mean, got to 108 on Thursday. Tried to bounce but couldn't. So under 108, I think it can go to 100. Even if it pops to 116, puts can work. Stays between 108 to 116. I would just treat it as a quicker trade, and then the upside, I don't really see anything yet. Nothing great. Snow last week fell at 176. I mentioned last Sunday, and then dropped to 146. So I had a pretty sharp drop. Tried to reclaim 164 on Friday, couldn't, and then dropped to 152. So next, if it fails to 146 again, we can go to 132 and then 126. So puts can work under 146. Puts can work under 155. And even if it pops up to 164 and fails, puts could work. But if it gets through, then calls could work as a day trade. But just be aware, it's just been in a range for the past few months. Tesla earnings this week. So had a really weak Friday, right? Dropped, I think, about 20 points on Friday. So yeah, this drops under 200. 179 is in play, could go down there. So 20-point move priced in. Yeah, I think this can go lower, so I would just wait on this one, right? Especially the past, since the last Fed meeting, right? It's gone from about 311, 312 down to 204. So yeah, I just wait till after earnings to trade this. I don't really know what's going to happen. QQQ closed at 260.74. So yeah, Thursday, got back up to above 267, tested 270. Looks like it wanted to break out on Friday, couldn't, and then reverse right back lower. So could see some chop here this week. I think a few days of consolidation, right? Needs back to 270, right? If it gets back to there, it's got a shot to go to 280, 285. Under 260 can, go back to 251, and then under that can go to 237. So this week could be a little bit trickier, right? I think we can see decent size moves both ways. So we'll see. We'll see how the market acts. Okay. SPX closed at 35.83. So couldn't hold those June lows at 36.45. Closed at the lows on Friday, right under 35.88. So could go to 3,500 again early this week, and then does a double bottom there, maybe. So under 3,500 and go at 33.93, right? Above 36.45, calls could work, but I would treat both ways here as quicker trades. I mean, take what you can get, but I wouldn't buy and hold and expect, multi-day move in one direction. I think the market's in a bit of a wider range now, and it's in between a bunch of different support and resistance levels that could hold. But as of now, it's unclear. It's unclear to me. So just gonna tread a bit more lightly, especially after it's been a pretty good cut past few weeks. So just try to protect profits and take what you can get. So yeah, lots of moving parts the next few weeks, right? Just be patient, protect what you have, protect your capital, protect your profits. After the next Fed meeting, I think it's going to set the tone going to the end of the year, right? So the next, 7, 8 weeks after the next Fed meeting, I think that'll set the tone going into December, going to Christmas. So, we'll see what happens. I mean, it's hard to say, which direction the market goes. Does it double, triple bottom down at the June lows again? It's possible. I mean, it's the market. Take a quick look here. Yeah, so SPX has been pretty much in a downtrend since mid-August, right? And, it's mid-October now. So possible we see another attempt to get back towards 4,000, prints a lower high on the next rally and then back lower. It's possible to see something like that, but it just really depends on how the market reacts to right the next Fed meeting and just big tech earnings and more news. So we'll just take it a day at a time and see what happens. All right. So yeah, thank you everyone. I hope you all have a great rest of your Sunday, and I will see everyone tomorrow morning. Thank you.